Hey everyone, ready for a deep dive into something kind of different today?
Yeah, definitely.
We're going to be looking at the Kangaroo Tail Breakout.
Oh, interesting.
It's a day trading strategy specifically for the USDJPY.
Okay.
And I know the name sounds a little strange.
Yeah.
But it'll make sense, I promise, as we go through this.
Yeah,
We've actually got some research here
Cool.
that goes all the way from January 2008
Wow.
to September 2020
Okay.
with some back-tested results.
Awesome.
But what I think is really cool is that it's supposed to be really simple
Oh, nice.
and rule-based.
Yeah.
So we don't have to overthink things,
Yeah.
right?
Yeah.
Just clear signals
That's what we like.
and actions
Exactly.
for those of us that like to keep things simple.
It seems like this strategy is all about tapping into how the USDJPY tends to reverse really quickly, even within a day.
Yeah.
It's trying to catch those little hops.
Ah, okay. So that's where the whole kangaroo tail comes in,
Yeah,
right?
exactly.
Like we're thinking of a kangaroo, dips down
Right.
and then shoots back up.
Exactly.
So how do we see that on the charts?
So the strategy uses daily charts,
Okay.
but specifically ones that are set to EST or New York time.
Okay.
And they have 5 bars for each week.
Got it.
So imagine 3 bars where the middle bar's low is lower than both the bars before and after it.
Okay.
That's your kangaroo tail for a buy.
Okay, so we're looking for that middle bar to
To dip.
dip down, make a little tail.
Yeah.
Okay, so then how does that actually turn into a signal?
So let's say you see that kangaroo tail pattern.
Okay.
To buy, you'd put in what's called a buy stop order
Okay.
at the high of that 3rd bar.
The one after the tail.
Exactly.
Right.
And then your stop loss would be at the low of that same bar.
Okay, so we're basically waiting for it to go above that 3rd bar to get in.
Right.
And then if it dips below, that's our stop loss.
Exactly.
But doesn't that, filter out some trades that could have actually worked out?
Yeah. Well, it does prioritize minimizing your loss. So it's like if it breaks that low, it might not be as strong of a signal anymore.
Gotcha.
So for a sell, it's a mirror image.
So
You're looking for a middle bar with a high that's higher than the bars before and after.
okay, so buy high, stop loss low,
Mm-hmm.
sell low, stop loss high.
Yep.
I think I got it. So far, pretty straightforward.
Mm-hmm.
What about exits, though?
Right.
Do we hold these indefinitely, or is there a time frame?
This one's all about those intraday moves.
Okay.
So it says end of day exit for any trades less than 24 hours.
Interesting. So no matter what, even if you're up, you just close it out.
Close it out before the day ends.
That's interesting. So just kind of taking advantage of those short-term
Yeah,
fluctuations.
exactly.
I like it. No holding overnight.
Nope.
And wondering what's going to happen. So you mentioned some back-tested results.
Yeah.
What kind of performance are we talking here?
So they showed a really good equity curve.
Okay.
And just to remind you, that basically shows how profitable the strategy is
Got it.
over time.
Okay.
And it was really consistent over that, 13-year period.
Right.
And then the average profit per trade is about 4.4 pips.
Hold on. For people who don't know, what are pips?
Pips are the smallest price move in a currency pair.
Okay.
So those tiny little increments,
Got it.
up or down.
Okay, so 4.4 pips, that sounds pretty good. But in the real world,
Right.
there's got to be some, caveats to this.
Absolutely. So it doesn't include stuff like commissions, spreads, or slippage.
Right. Those little extra costs.
Right.
That we have to think about.
Exactly.
So 4.4, probably a little less than that.
Yeah.
But still a good starting point.
Exactly.
Okay, but this is what I'm really interested in, right? The research actually mentioned some modifications we can make
Yeah.
to potentially boost that performance.
Exactly.
Okay, so tell me, what are those and how does it change the game?
So it's basically adding filters.
Yeah.
Okay, so it's like adding a layer of refinement
Got it.
to the setup.
Okay, I'm ready.
All right. So for long trades,
Okay.
or buy trades,
Okay.
the filter is looking at the closing price of that 3rd bar.
Mm-hmm. The one after the tail.
Exactly.
Yeah.
We want to avoid trades where that closing price is more than 0.5%
Okay.
above the closing price of the 2nd bar.
The tail.
Yeah.
Interesting. So it's not just about the pattern itself.
Right.
But the price action leading into it.
Exactly.
It's almost like we're looking for it to be a more
Controlled?
controlled,
Yeah.
not like a crazy spike.
Yeah, if it jumps up too quick between the 2nd and 3rd bar,
Yeah?
it might be a false signal.
Right.
or too volatile.
Gotcha.
So by filtering those out, you're looking for more sustainable price action.
Okay, that makes sense. It's like a little safety net.
Yeah.
So how do we actually calculate that 0.5%?
Let's say the closing price of the third bar is 105.906.
Okay.
And the closing price of the second bar is 105.365.
Got it.
So to see if that increase is more than 0.5%,
Okay.
we'd subtract the second bar's closing price from the third bar's,
Okay.
which gives us a 0.541.
Okay.
And then you would divide that difference by the closing price of that second bar and multiply by 100.
To get a percentage.
Exactly.
So in that example, it'd be 0.541 divided by 105.365 times 100, which is like...
It's about 0.51%. So it's a little over our 0.5% cutoff.
Right.
So we wouldn't take that trade.
Okay, got it. So whether we're going long or short, that 0.5% is kind of like our checkpoint to make sure we're not getting into something that's too wild.
Exactly.
Okay, cool.
But there's actually one more rule that adds another level of prudence to the strategy.
Okay.
It's simple, but it's powerful. No trades on Fridays.
No trades on Fridays. I like that rule.
Right.
Get the weekend started early.
Yeah.
Is there like a reason behind that?
I think it's probably a few things.
Right.
You know, Friday trading can be kind of volatile, unpredictable, especially going into the weekend.
Right, yeah.
So it just avoids those risks.
It's like acknowledging that even in trading, we need to take a break sometimes.
Right.
I like it. So what kind of impact do these modifications have?
Well, the research says that they basically double the average profit.
Wait, double? So from 4.4 to like almost 9 pips?
Pretty much, yeah.
Wow. Okay. That's a big difference.
There is.
But still, we got to remember this is back tested, right?
Of course.
So how much should we actually trust that?
Right. So backtesting can't perfectly predict the future.
Right.
It's a good tool, but it's not going to catch everything.
So we got to take it with a grain of salt.
Exactly.
What else should we think about when we're looking at this strategy?
Well, first off, no strategy is perfect.
Right.
Markets change all the time. So what worked in the past may not work in the future.
Right.
So you always got to be adapting.
Right. So always learning, always evolving.
Exactly.
It's not like set it and forget it.
Right.
We got to be on our toes.
And another thing is diversification.
No, yeah.
You don't want to just rely on one strategy.
Right, right. Don't put all your eggs in one basket.
Exactly.
What if it stops working?
Exactly.
You got to have a mix, like a toolkit. Okay, cool. But one thing I'm thinking about is all this is based on the USD/JPY. What about other pairs?
That's a great question.
Could we use this kangaroo tail in other markets?
It's possible, but each pair kind of has its own personality, you know?
Right.
Like what works for USD/JPY might not work for, say, URUSD.
So it's not just a one-size-fits-all kind of thing. We can't just apply it everywhere.
You got to do your research.
Okay. So like what specific things would we be looking at if we're thinking about trying this in other markets?
Yeah.
Okay, so we've gone through a lot.
We have.
The kangaroo tail strategy, the name, the pattern, back testing, managing risk, diversification.
Important stuff.
But before we finish this deep dive, I want to bring it all together.
Yeah, good idea.
What are the things we should remember from all this as we go out and, do our trading thing?
Well, if I had to boil it down,
Okay.
I'd say first, simplicity can be a good thing.
Okay.
The kangaroo tail, I mean, it's got a weird name, right?
Yeah.
But it shows you don't need some crazy complex system to do well.
It's easy to get caught up in all that.
It is trying to find that, you know, magic formula.
It's the holy grail.
Right.
Yeah.
But sometimes the best way is just to keep it simple.
Okay, I like that. So, simplicity. What else?
The second thing is you always got to be refining.
Okay.
Like with the kangaroo tail, we added those filters.
Right.
Remember, no Fridays.
Oh, yeah, no Fridays. That makes it even better.
Right, so it's like we're taking something good and we're just making it sharper.
Exactly.
Always trying to get an edge. Always be learning.
Right. Always learning.
Trading is a journey.
Yeah.
You never stop learning.
Okay. So simplicity, refinement, and
the most important thing, trading is personal.
Oh, okay.
What works for me might not work for you.
Right, because we all have different...
risk tolerance.
Right, risk tolerance, yeah.
Different styles.
Yeah, like how much time you want to spend on it.
Exactly. It's like, finding the right shoes.
Oh, okay, I like that analogy.
They need to fit you.
Right, so how do we find those, like, perfect trading shoes?
Explore.
Explore?
Be curious.
Okay.
There are so many different strategies out there.
Yeah.
Trend following, mean reversion, all sorts of stuff.
Right. So try different things.
Experiment.
See what clicks.
Exactly. And don't forget about back testing.
Oh, yeah, right.
And paper trading.
So we're not, like, risking.
Right. It's like a practice run.
Yeah, like a simulator.
Exactly.
Okay, cool. So before we wrap this up, one last thought.
Okay.
We're looking at the Kangaroo Tail for USDGJPY.
Right.
But what about other pairs?
Interesting.
Would this work in other markets?
That's for you to figure out.
Oh, okay. So a little challenge.
Yeah. Go explore.
I like it. All right. Well, there you have it. The Kangaroo Tail.
Simplicity.
Refinement.
Personalization.
Yeah. This is just the start.
Right.
Trading is a journey. Keep learning. Keep getting better.
Never stop.
And find your own way to succeed. Until next time, happy trading, everyone.
This